Good evening. Thank you very much for joining us. It's a beautiful Monday evening, and we are here on the bottom line. On the bottom line, we say business at the speed of thought. Tonight, we want to gauge the economy. The Bank of Ghana's Monetary Policy Committee that sets the MPC base rate has set it at 19%. And tonight, we want to find out how that means for the common Ghanaian. If you look at the trends in the country today, everybody is talking about the economy. Everybody is talking about hardships. Everybody is talking about feeling the macroeconomic indicators that have been used by almost all economists and government of Ghana and people who really delve deep into the economy. How does it reflect in our pockets? These are the questions that we want to be asking tonight, so you want to stick and stay with us. This is the bottom line. We are live on DSTV channel 277. We are live on our Facebook, Chairman Kwesi Free, and of course, Metro TV News page. And we are live from our studios here at Ridge in Accra. Stick and stay with us. If you have any concern, any question at all, you want to put your comments up via the numbers that are scrolling on our screens, and we'll try as much as possible to read them for you. So tonight, it is about the economy. Tonight, it is about the MPC report of the Bank of Ghana. Stay with us. Right, so you're welcome back from the break. And I've told you earlier on that tonight we are discussing the MPC, but of course, that will dovetail into a number of discussions for us tonight. We'll be looking at the economy on the whole. And I have a very special guest who will be joining us live on Zoom to go into the details of all of the things that we are going to discuss tonight. How is the economy faring for you? We want you to put up your comments. We want you to put up your concerns, whether on Facebook, whether on the number on the screen. If we get it early enough, we'll read it for our guests to answer. So this special edition is more of a public forum. I will be asking my questions, but if you put yours across as well, I'll put it to our guest tonight concerning the MPC and the number of hardships that everybody has been complaining of, particularly with the economy. However, before I introduce my guest, let's get to the studio and look out for what the governor of the Bank of Ghana had said to the press today.
With a strong rebound in growth and the closing of the negative output gap, the balance of risk is clearly on inflation. The MPC took the view that it needed to decisively address the current inflationary pressures to re-anchor expectations and help foster macroeconomic stability. On the basis of the above assessment, the committee decided to raise the policy rate by 200 basis points to 19%. If you look at our inflation forecast profile, we expect that inflation would get back into our target zone sometime in 2023. It means that you would still see heightened inflation rates between now and then. The pressures would probably only fade out gradually. And it is a difficult time for all of us. Inflation is a canker, and it affects the poorest most. The poorest households are the ones who feel it most. And this is why the MPC had taken the decision to decisively do all that we can using the tools that are at our disposal to bring it down as quickly as possible.
Meanwhile, in the foreign exchange market, the Ghana cedi has depreciated by 15.6% against the US dollar, 13.1% against the pound sterling, and 13.6% against the euro in the first quarter of 2022.
So that's exactly it, the inflation rate and how the country will be able to control it. I'll not take too many out of the words of our guest tonight. Tonight, is a very special person, a banking consultant, in the person of Nana Otuo Acheampong. And tonight we are discussing the Bank of Ghana hikes, of course, the policy rate which has been put up, and the ramifications of it. But let me go straight to my guest tonight. Nana Otuo Acheampong is a banking consultant. Good evening, and thank you very much for joining us, sir.
Good evening, Chairman.
I hope you are doing very well.
I'm fine, thank you. And yourself?
I am blessed by the grace of God, and we are happy to have you online this evening to educate us more or less about the things that are happening, particularly with the Bank of Ghana setting the policy rate at 19 points. First of all, my very basic question would be, what does this mean for the country? We heard the governor of the Bank of Ghana trying to explain that there needs to be a control of the inflation rate and so on and so forth. But for you, as a banking consultant, and for us as lay people, what does this mean?
Basically, what it means is that the model that the Bank of Ghana uses to manage the economy is what they call inflation targeting. In other words, the interest rate is used as a tool to move in tandem with inflation. So the higher the inflation, the higher interest rates will be. And then reverse happens where when inflation is down, we expect interest rate to also go down, so that the purchasing power, how much you can use your currency or your money to buy, will be maintained. So now, with inflation running at 23.6%, that's the latest figure we have for April, and interest rate before today was at 17.0%. That meant that there was a gap of 6.6%, almost 7%, between inflation and interest rate, which means if you put your money in a savings account and you get that interest rate, it can buy less for you. So at all times, when the central bank is using inflation targeting, they want to close the gap between interest rate and inflation. So in an ideal sort of in the room temperature type of thing, they would have said, okay, inflation is 23.6 and interest rate is 17. So to be able to catch up, then increase interest rate by 6.6% so that they will be at par. But then that will not be. So therefore, what Bank of Ghana said was that they are doing what they call the gradualist approach, that increase interest rate gradually rather than in one fell swoop, like 6 or 7%. So the last meeting, they increased it by 2% from 15 to 17%. And at this meeting, they increased it from 17 to 19%. And they hope that this will put inflation in check. And when it comes down, then interest rate will also start coming down. So in a nutshell, that is what it means. The next stage is to ask, what is the effect of this on our pockets? That, the interest rate has two sides.
Nana, before you come to the effect, I want to stay on that a bit. That the expectations when it was increased from 15 to 17 some months ago, were that interest rates were going to come down, at least by some percentage points. And I want to ask, have we had this impact? We saw prices galloping or rising at a galloping speed, and the Bank of Ghana at the time, we thought that was going to be able to control at least the forex exchange and the rate at which things were going up. So we were expecting to see some level of stability. Before now, we see another increase, and then everything begins to drive down. Have we seen that yet?
Well, for the exchange rate, you will notice that since they increased the interest rate from 15 to 17%, we've seen some form of stability in the exchange rate of the cedi to the dollar. Before then, it was really galloping, but now it's almost settled at around 7%, plus or minus. So yes, it was able to put the currency rate in check. However, inflation is measured by different items in the basket. For instance, food inflation, which is the highest, moved to about 26% against general inflation, which was 23.6%. So, and there are certain items that are outside the control of the central bank, the Monetary Policy Committee. For instance, if there's no food in the system, or we are not producing enough to feed ourselves, there's virtually nothing that a central bank can do, except that people realize. But even there, the central bank gave some seed money to provide incentives for the banks to lend to the agricultural sector, which the latest report shows that, yes, there's a lot of interest shown by the banks, but the take-up rate of that facility hasn't been as expected. It's very slow. You see, so therefore, if we as the people are not producing enough food to feed ourselves, let alone export, then we find the food inflation, running as high as 26%. So these are some of the realities that we have to put in context when we are discussing this monetary policy issue.
Let me now come to the point you had wanted to raise, the impact of all of this. You said that we have seen some stability, at least in the currency rate, which is very obvious.
Yes.
But for the inflation rate, which would dovetail to employment and other sectors of the economy, we haven't seen that stability yet. However, there is still the talk about all of these macroeconomic indicators, how good they have been, and so on and so forth. But for this particular one, monetary policy rate at 19%, what should be the effects in our pockets, the layman?
Well, the effect is that the cost of money is high now because interest rate, defined rightly, is the cost for the use of money. If I take money from a bank, for using the bank's money, they will charge interest, which will be the loan rate. If the bank takes money from me, that is, put money in a deposit or savings account, and the bank is therefore using my money, they'll have to pay interest, being the cost of using my money. So that's what I was trying to say, that interest rate has two effects. Those who are putting money in the bank as savings or deposit now will get a higher rate of return because the policy rate has gone up. And those who are borrowing, that is using other people's money other than their own, will also have to pay higher for that use of other people's money. So in simple terms, that is what interest rate is measuring. Using people's money or using others' money, and the cost of using that is what you pay in the form of interest rate. So now, if we drill down further, we ask, okay, on the side of those who are using other people's money, i.e., using the bank's money, which is you and I savings, which is there, and then the bank is using it to lend to a third party, then it means that that cost will be higher than before. Before, if it was 15%, now it's gone to as much as 19%. That is even the rate that is used to lend money between the banks, from either Bank of Ghana to another commercial bank, or between the commercial bank. However, if you and I are going to a commercial bank to borrow, they have to add what we call a risk premium. Premium which measures how good or bad we are as borrowers. And so the worse borrower you are, the higher your risk, and therefore the higher the interest rate you pay. Now, when interest rate moves to 17%, the eventual rate to the likes of you and I was around 23, 24%. Now that it's gone to 19%, the chances are it will move up to between 26, 27% for the eventual borrower. But on the other side, we also expect that if you've got spare cash and you put as savings or deposit in the bank, you also get higher interest rate for the use of your money.
And is it the case that, as some should I say, theorists or proponents have proposed, monies that are repatriated by expatriates or business owners who have their roots in other countries will now go down? Then the rate at which they were sending monies back, maybe converting into dollars and not passing them through the banks, or even if they were passing through them through the banks, the rate at which they were sending them will now reduce because they would now want to keep the monies here because of high interest rates. They are going to get more interest. Is that the case?
That's a good inference to draw. That because, as I said, when people are using your money, you get good interest rate for it. Mm-hmm. When you are using other people's money, mm-hmm. you also pay the price for it. So mm-hmm. therefore, if there are expatriates working here, and instead of remitting their money on a weekly, on a monthly, quarterly basis, they can see that if they keep it here, they will get higher interest return on it. Then they will keep it here. But so therefore, what I explained at the onset mm-hmm. was that there are two sides to interest rate. Those whose money is being used will get a higher return, and those who are using other people's money will also pay a higher cost. So effectively,
so Nana, is this
confirmed?
I reckon that you give other reasons for the economic progress or growth, and so we cannot dwell on this alone. We'll come to all of those ones. But is this a good step towards a good economic recovery? We are going to see people retain their monies in the country, interest rates going high, and so on and so forth. Is it expected to lead into an economic boom? For example, people opening up more businesses, people getting employment?
Not at all. Not at all. I think at best, one would expect that the cost of money will be lower than what we are faced with now. Unfortunately, these have been punctuated by two main events. First, COVID came in, and it threw all our economic policies, in turmoil because it was not anticipated, and it was the aim of the government that it was better to save people because once they die, you cannot resuscitate them. While with an economy, if it goes down, you can work to turn it around again. So a lot of money that was not budgeted was used to save people's lives. Now, just as we were about to get out of this, Russia and Ukraine came in, and some of your reports have confirmed that we do depend a lot on bread in the morning, and bread, the grain for bread, the flour, about 30% of the import was coming from Ukraine, Russia. And so that again, brings in higher cost. So the higher cost is not caused purely by either increasing or decreasing interest rate, but it's caused by the demand, side, what we are demanding to feed ourselves. If we can feed ourselves internally by producing or eating what we produce, then we would expect rates to go down. There's a typical case of KFC, Kentucky Fried Chicken, where they are not able to, at the moment, source enough chicken from Ghana. So they are having to import chicken from faraway South Africa. I mean, who is to control that? Why shouldn't we be able to produce enough chicken? Because a couple of weeks ago, I went to Achimota Mall, and Chairman, believe you me, the number of people that had gathered at the KFC there. I was wondering whether there was a party going on. So the demand is there,
Yeah.
but then we are not able to supply. So whose fault is it? So we have to ask ourselves, why aren't we able to produce enough chicken to feed an outlet like KFC? Um, so we have to do some soul searching ourselves to see how we can help. Yes.
I agree that the problem is very systematic. We should, as a country, have been able to tote the line of productivity by now, being able to produce a lot more goods because, yes, as you say, there is the demand, but we are not producing enough to meet the demands in the country. So we'll come to this systemic problem. However, people believe, when you mentioned the COVID and the Russia-Ukrainian war, for example, people believe that we got some amounts of money from the World Bank, which was declared by the President, His Excellency Nana Otuo Acheampong, for the Russia-Ukraine war. There was some level of anticipation. I mean, there was some level of talk about it, even in the US, in Europe, among the European countries, and so on and so forth. So there was an anticipation towards this Russian-Ukrainian war. We should have prepared for it. People believe that government is dependent so much on the troubles of COVID to justify itself in not being able to manage the economy. There are other issues like mismanagement, fiscal indiscipline, and so on and so forth. But over-reliance on Russia-Ukraine war, every problem, COVID and Russia-Ukraine.
I doubt that is the case. To start with, I don't think there was any misuse of COVID funds. I mean, I stand corrected, but from the information that is available to us as members of the public, because I'm not part of government, as members of the public, we know that the monies that were used judiciously. They've accounted for the money to Parliament, and it's up to Parliament to come and tell us whether the monies were not used judiciously or not. But that aside, nobody is also trying to put everything on Russian-Ukrainian war. I give one specific example. On another channel this evening, they were showing the effect of this war on bread making, and they went to Nsawam to see how people are making bread, and they reported that there has been an astronomical increase in the price of flour that they use for this thing. They were buying about 500 cedis a bag. Now it's 1,500 cedis. How did it come about? Because we don't produce flour here. It's an import, So, and the import, they say about 30% is coming from Russia, Ukraine. Now they are not exporting anymore, and therefore the 70% that's available from other markets will naturally see the price shoot up. And so these are realities that we have to face. So we can't explain these things with theoretical constructs. You have to look at the practical aspect. So practically, if you're looking for flour to make bread, and the flour is coming from a war-torn country which is no longer exporting, then it means that demand is going to exceed supply, and simple what they call level 100 economics will tell you that where demand is higher than supply, the price goes up, and where is the opposite, the price goes down. Am I right, Chairman?
Yes.
So
yes.
therefore, we have to put these things in context and say that well, the World Bank provided money. See, as we speak, this inflation and fuel issue is not only applicable to Ghana, it's worldwide. If we take UK, for instance, where I used to live, and therefore I refer to that a lot, you will see that the government have seen the effect of this high cost of living on the citizenry, and they are providing interventions. That's because they have the money. But here, we don't have the money. For instance, the last quarter, government revenue went down by, they didn't meet target by 2.6 billion. And so when you talk of fiscal policy, you are talking about your expenditure versus your revenue. And so if your revenue is not meeting your expenditure, and these are not extravagant expenditure, they are necessary expenditure. One of the biggest is free SHS. We are spending a lot on education. And so if we don't have the money to meet these expenditures, then where do we go? So these are real practical issues that theories don't resolve, but we resolve that practically. So let's put those in context and see whether, e-levy was said to be one of the factors that fail the government in meeting its revenue target. Now, e-levy is in. We wait to see the next quarter how that gap or hole will be plugged, whether it will, now we'll be able to meet our expenditure versus our in revenue generation squarely and fairly. So those are some of the practical things that we have.
I like the points you make, and Samson Asaki is the head of Importers and Exporters Association of Ghana. He has a comment to make. When we come back from the break, I think we will put him online to make his observations, and then he will go off so that Nana, you still can have time to respond to some of the observations that he has. So when we are back from the break, we'll put him online. When we are back from the break as well, we'll be talking about e-levy. Of course, you have stated that government wasn't able to meet its revenue, probably because it had projected for e-levy. But now, e-levy is in. And then again, we'll be asking how, as a country, we'll be able to move from taxation into production. That was a promise this current government had given when it was coming into power, that we are going to move from taxation into production. We are not saying that taxation is not important, but we are seeing e-levy, for example. We are seeing, if you take the fuel prices, for example, people would say there are too many taxes after the deregulation policy, after the deregulation prices. So Nana, kindly indulge me. If you're watching us, we are speaking to Nana Otuo Acheampong, who is a banking consultant, explaining to us the ramifications or the impact of the Bank of Ghana setting its monetary policy committee rate at 19. Stay with us, we'll be right back. Right, so you're welcome back from the break. This is still the bottom line. Let me quickly announce to you that the number scrolling on the screen is not for phone calls. Please, we are only picking text messages, WhatsApp messages. We are only picking WhatsApp messages. So a number of them have come up. Let me see this one. This one says, Ghana already has one of the highest commercial banks lending rates in Africa. And it is very worrying. You didn't add your name. I will put this question directly to Nana Otuo Acheampong when we have him back on the line. So tonight, if you have just joined us, what we are discussing on the table is a hike. It's not actually a hike, but the increment of the Monetary Policy Committee rate from 17 to 19%. So previously, it was from 15 to 17%, and it's currently today been reviewed from 17 to 19%. And we have been speaking to a banking consultant who understands these things and the importance of it, the relevance of it to us as an economy and to you as an individual. He's been joining us on Zoom. If we have him back on the line. Nana, thank you very much again, and you're welcome back on the line. So there were points that I have stated that when we are back, I'm going to ask you, or I'm going to dwell on. And the first one is a question somebody has put us. The bank's lending rate. You are a banking consultant. People believe that the lending rate is too high, and so you are only concentrated on the profits for your shareholders and not as the people who would come and borrow to do SMEs and small businesses and so on and so forth.
Now, if you set up a bank and no customer walks through the door, you don't have a bank. and therefore, to every bank, customers are the most essential commodity that they can possibly have. And so the interest of customers is always at the heart of every commercial bank, because without them, you don't have a business. Now, with the question of lending rates, it is true that relatively it's high, but also if we go back in history from pre-2016 rate to now, or before the recent increase, you would have seen that it had really come down because it was in the 30s. Now, before the 15% moved to 17%, some institutions were borrowing at as low as 19%. So therefore, moving from 31, 32% to 19, one wouldn't say that it had not come down. Yes, it was different from the policy rate, but as I explained earlier, the policy rate is not the rate that you and I will borrow money from a commercial bank. The policy rate is a benchmark rate which the central bank uses as the banker of last resort to lend to banks if they need help, or for the banks to borrow money among themselves. So it's only a guide. It's not the rate at which you and I can walk into any commercial bank and get loan at that rate because of our risk factor, risk of default. The non-performing loan that tells us how much people who have borrowed have not paid, and it was increasing until recently when it started coming down. So therefore, the interest rate, yes, relative to other countries may be high, but relative to within ourselves, within the country itself, from 2016 to date, it has really come down.
Right. So thank you very much for that. And I asked that because I have Samson Asaki, who is Executive Secretary of the Importers Exporters Association of Ghana. They are also pretty much concerned about interest rates. They are concerned about the inflation. They are concerned about the exchange rates. And then most importantly, the lending rate as well. So let me, kindly indulge me, let me get to Samson Asaki for a minute or two. Samson, if you're online, you had some comments to make. The main point tonight is that the Bank of Ghana Monetary Policy Committee rate has been set at 19%. And your concerns so far?
Let me say a very big good evening to my very good friend, Nana Otuo. He's been a very long time friend, but since he came to government, I've not been able to meet, but I think he's still a friend.
Oh, sorry.
I must tell him that he should look for me, he should look for my number, and let's talk. I must say that as a country and as a person who advocates for the business community, we are not happy, as much especially of the way in which the Bank of Ghana is kept on increasing the prime rate. I remember, I think 2-3 months ago, I granted an interview where I said that then the central bank should be able to give permit to the commercial banks themselves to import dollar. At the time, we were discussing about dollar each to the cedi ratio. And I said that with that, because it has happened before during President Kufuor time, that lead to a very drastic reduction of the dollar to the cedi. But what was happening, the Bank of Ghana, the amount that the Bank of Ghana was pumping to the system was going to be inwardly adequate. And Nana Otuo also gave his opinion. But that notwithstanding, what I want to say is that at the time the prime rate was 14.5. Some of us were even at a point it became 11% to 12 to 14. The highest was 14.5. We advocated that through the central bank, which I know Nana Otuo is one of the board of the Monetary Policy Committee in Bank of Ghana. I advocated that why was the Bank of Ghana not asking the commercial bank to reduce its lending rate to customary with the Bank of Ghana prime rate, so that at least business community can borrow. I was happy when you questioned him that how will this help smaller entrepreneurs and SMEs? Simply because now the president some few days ago His Excellency the President, was talking about how Africa was to build entrepreneurs. Now, you cannot build entrepreneurs when your banking interest rate is hovering between over 27%. And I know Nana Otuo will confer to this. The prime rate was at 40.5% when banks were borrowing at 25 and more. When we are asking that the interest rates go in tandem with the Bank of Ghana prime rate at a 14.5. But the Bank of Ghana, including Nana Otuo, was so silent, saying that until 21st of March 2022, this year, when they now met as a monetary committee and increased the prime rate to 70%, then his boss, when I'm saying his boss, the governor of the Bank of Ghana himself faces the microphones and asks the commercial bank directly to up their interest rate because Bank of Ghana has upped the prime rate by 70.5%. So question was, why would the Bank of Ghana do that to Ghanaians? Because at the time your prime was at 40.5, why did you tell the commercial banks to reduce their interest rate? At the time, when you increase up your prime rate, you ask the commercial banks to increase their interest rate. Already the interest rate in Ghana is not lucrative, it's unattractive. Business community has run away from the banks. And so when the president called for building African entrepreneurs, I asked myself, where do you start from? And so quite clearly, what is happening now with the Bank of Ghana upping the rate to 80%, the commercial banks will be interested to rather borrow government CD, treasury bill, right? Treasury bill to get more profit, because if they borrow to a manufacturer, if they borrow to a producer who will produce, pay high electricity tariff, utility tariff, will not end up paying the loan that acquired from the commercial bank back to the banker. The bank will even prefer to give the money to government and get to the as compared to give the money to business community, where at the end of the day, if they are unable to pay, it becomes a non-performing loan, as he said.
Right.
So I strongly believe that is. I want to ask Nana Otuo, what
Yes.
is the motive? Are you making are you asking the commercial bank to borrow to government more than to borrow to the public? And you cannot build your economy when they are borrowing to government on TV instead of borrowing to the business community so that they can build and expand business. Let me end up by saying that my name is not well spelled. Samson is not ended with M, it's ended with N. So if you can take note of my name.
Right, thank you very much. But Samson, let me also make it clear to you. The spelling of the name is very much well noted, but let me make it clear to you that Nana is not a member of government, and his boss is not the governor of the Bank of Ghana. Nana is only a member of the MPC committee.
Nana is a member to the Bank of Ghana Monetary Committee.
Yes, but he's not a member of government.
I'm saying he's a member. He's a board member.
You know the composition. The composition of the MPC is not only members of government. There are members who are lecturers, professors from the University of Ghana Economics Department. Some I know. So let's place it well so that the discussion will be in proper context. So, Nana, you are here. Let me come back to you on that before I come back to my questions. On Samson's concerns.
Well, firstly, I'm glad to have met Samson again today. It's true that we go back years, but I think we lost telephone contact, so we'll reconnect. Now, yes. Samson, yes, it is true that interest rates are high now, but it is not the case that the governor asks banks to increase their lending rates. He can never do that, because we operate a free market economy, and in the free market economy, central banks don't dictate what rates that should be charged. At the moment, the interest rate for lending is set by what you call the Ghana reference rate, which is computed by the Association of Bankers. So at the beginning of every month on their website, they will give what the lending rate is, which will not be the same as the MPC rate, because the MPC rate is only a guide, but it is not the ultimate interest rate that will be charged to borrowers. So therefore, no bank will also set up shop to trade in treasury bill, because apart from Baroda, which used to do that a lot, the yield that the return on treasury bill is far lower than the return on lending to the private sector. So every bank will prefer to have in their portfolio of lending more to the private sector than to the treasury bill. So therefore, that assumption is also disputable. Now, yes, interest rates are relatively high, and I think I've emphasized and will
Yes.
re-emphasize.
Yes.
But if we look at the fundamentals of our economy, which are the issues that dictate the level of interest rate, then from 2016 to now, until March, it had come down drastically from over 30% to just hovering around 20%. So therefore, the efforts were made because as a free market, the central bank cannot fix interest rate that commercial banks should charge. No, because that is during the military regime where they had price control. Now, price control has been abolished so many years now, and therefore you cannot set rates that banks or institutions should charge. You can only give a guide, and the guide is what is being given through the setting of interest rate by the Monetary Policy Committee. I think that's the answer to the question.
Yes. So I don't know if Samson you are still on, but I'll put these ones to Nana. Our time is almost running up. But
I'm still on.
if
I'm on
if
here free.
you're still on, Samson.
Yes, I'm here.
Okay, let me come back to a
quick
few.
one.
I hope your questions have been answered. I'll give you
I'm on.
the last. I'll give you your last bite. But let me put these questions to Nana, and I'll give him his bites. I'll come to you for your bites. Then we'll give Nana the last bite, so we're able to round up. This one says messages from the public, and we said that please don't call. Just put it up on the WhatsApp line for us, and we'll try as much as possible to read it for you. Nana, good work done. Moso is proud of you. From Fantastic in Kumasi. Please, good evening. Please ask Nana, does that mean that if you leave your money in the bank, the interest on your saving account will increase? That's a question. Someone says we should ask Nana, but you didn't add your name. Nana Otuo Acheampong is from also in Asante Achem. It looks like Asante Achem people are watching. Well done. Your people are solidly behind you, Nana from Moso. Well, it's all part of it anyway. Good evening. Please, what goes into the determination of the Bank of Ghana's prime rate? Why can't the central bank set out a benchmark rate, just like the policy rate, beyond which the commercial banks must charge as rates of interest to the loans they grant to their customers? In fact, most commercial banks are overcharging their interest rates. From Victor Esiedu Entry in Kumasi. So that's the question from Victor Esiedu Entry in Kumasi. Let me just take this one finally. This increment of policy rate will not help in curbing the galloping inflation, but rather worsen our current problems, because food inflation is the highest on the list. And this inflation is not caused by customer purchasing power, but rather external factors which we have a little control over. To this one, I think Nana had spoken about the Russian-Ukrainian war, and I had specifically asked him that the over-reliance on this, and for instance, COVID and so on and so forth. So he had answered this question, but this question is coming from Augustine Ali. Augustine Ali sent in that one. So, Samson, I would want you to add your final words to it, then we can let Nana answer all of the questions, including your final one.
Well, what I want Nana to note is that to go back and cross-check on the 21st of March, when the Bank of Ghana met on their monetary policy rate and increased up the rate by 17%. Specifically, the governor of Bank of Ghana met with the press and granted an interview, or when he was delivering a speech, directly asking the commercial banks to up their interest rate because the prime rate was up by 17%, and that is on record. And I even want you to play it now so that Nana will see and understand that what I'm saying is not just a fabrication, but it's reality. It was played all over the media houses. Two, I am saying that yes, we all know the rate of the treasury bill. But I can tell you that the commercial bank will even be more comfortable, even though it's low, but it will even be more comfortable to borrow to government than even to borrow to private sector. And not just that, the private sector is also being very circumspect of the high rate that commercial banks intend to borrow to us. And so it is not lucrative, because when you go for it, at the end of the day, you are working for the bank. You are not working for yourself because of where the rate is. And so we are strongly believing that there should be a way that the governor of the bank or the central bank should also be thinking about how to grow indigenous.
Right.
Because we talk about import bill. And of course, we also need to look at production base. Even if you talk about he visiting a Chibota mall some weeks ago, and so happy we were tripping to KFC, and then so assuming the poultry they cooked or they fry, if they were to come from Ghana. If you ask Ghanaian Poultry Farmers Association, they will tell you their challenges. If you ask farmers association, even peasant farmers, they will tell you their challenges. So indeed, as I said, Nana is a very renowned person. If he speaks, his voice is just as much as my voice, the government will listen. I strongly believe that we need to do something now to salvage the situation. At which at the level of the frame rate now at 90%, even with the 27% that business companies to borrow from what you call it, from the commercial banks, they were walloping. Now that it's up by 90%, I don't know which rate that they are going to place that will be very insensitive to the business community. It is disingenuous to the business community as it stands now.
All right. So let me get back to Nana now with some of the questions that have come up through our text messages. Somebody is asking why we brought only Nana. We wanted clarification and a clearer understanding of what has been done today by the Bank of Ghana. And Nana magnanimously agreed to speak to us. He actually even wanted to come into the studio, but for some few reasons he couldn't. And we have had Samson Asaki speaking and asking questions as well. So, Nana, we are back to you now.
Yeah. Yes. Firstly, somebody asked whether now that interest rates have gone up, his money in the bank, will he get a higher return? The answer is positive. You know, he will get a higher return for his deposit or savings account. We still continue to repeat that the central bank in a free market has little to do other than set the benchmark rate, and to be up to the banks or the commercial banks to decide what rate they charge customers, because it's a competitive market. And so if there is no externality, then the regulator doesn't come in. It comes in only when things are externalities do exist. So the benchmark rate that they have set is not Bank of Ghana. And I remember what Samson was saying, that in the March this thing, because I normally attend the MPC briefing that the governor does. It was in answer to a question that somebody posed, that now that policy rate has gone up, does it mean that the banks will also have to increase their rate? And of course, it's like night following day. If policy rate used to be 15 and it's gone to 17, which was at the time, then you wouldn't expect the banks to lower their interest rate to customers. They also have to increase their distance. So I think that was the answer to the question that was posed.
Right.
So generally, I think we sum up by saying, yes, interest rate has gone up. The effect is that the cost of the use of money is also gone up for both parties, those who are saving and those who are borrowing. Those who are saving will gain more, and those who are borrowing will pay more for the use of other people's money. I don't think the governor takes pleasure in putting up these increases, but they have a job to do, and the job is to stabilize the economy. And they have chosen this inflation targeting model, which therefore looks at the relationship between interest rate and inflation rate, and they have to move in tandem. So with inflation running at 23.6%, there was no option but to
increase
move
it to
interest
19%.
rate Exactly. That's what it is. Yes.
Right. So Nana Otuo Acheampong
on
is
that
a
note-
banking consultant, and we are grateful for having you here on our show tonight, and with all the explanations that you've brought up and the economic basics that you have given to the analysis that you've given to us tonight. Thank you very much for joining us tonight, and for Samson Asaki as well for joining in with your questions and your concerns, especially that on the part of industry. My name is Kwesi Efriye, and I have been your host for the evening. This is the Bottom Line. We round up with a special birthday wish to our General Manager Nathaniel Lai here at Metro TV. We say a very special happy birthday to you. It's been exciting working with you, with all the advice that you give and the technical backing that you give. Happy birthday to you.